Hello everyone, welcome to Trade Breakdown on EU. Now, if you haven't watched the trade breakdown before this on gold, then make sure to watch that one first because I've explained some really important things in that one, right? And make sure to make notes of that. Alright, let's get into the breakdown. So first of all, we're gonna start off with the weekly time frame and the daily time frame to do three things, right? We're gonna use these time frames to first of all determine our higher time frame drawn liquidity, right? We're going to use them to determine our higher time frame buys, and then last but not least, we're going to use them to build a narrative for us, and then we're going to refine them down to the 4-hour time frame and look for a trade idea there, right? And we're going to match it with a key level and a CRT on the 4-hour time frame. So starting off with the weekly time frame right here, you can see that since last few weeks I was expecting higher prices, right? We had formed this weekly CRT, and once this was purged right here and price closed above, my drawn liquidity after that was then higher, and I've been expecting and anticipating higher prices until this drawn liquidity is reached. Now right here you can see that we finally reached this drawn liquidity and we've taken out this range high. Now at the moment we are in a unique position, right? We now have to determine where price could potentially head towards this particular week, right? One thing you need to remember is that once a drawn liquidity is reached, you don't start looking for a reversal straight away, right? You should never do that. The only scenario in which you're going to expect a reversal once drawn liquidity is reached, right, as if the higher time frame monthly and weekly time frame is backing it up with at least 2 to 3 concepts like key levels, market profiles, and etc., right? That's the only time you should expect reversal, and there has to be a clear logical framework behind it, right? And there also must be a lower time frame confirmation, right? But in most cases, once drawn liquidity is reached and price takes out a significant opposing end of the range, your objective is to first of all just to expect a retracement, not a reversal but just a retracement, right? That's what you should expect first. So right here you can see that we've taken out the range high. Now I will expect a retracement before we could either move higher or we could reverse completely, right? Now that's a topic, that's another topic in itself. But after you expect a retracement, you're then gonna analyze the lower time frame price action and see whether we can turn this retracement profile into a reversal profile or whether we're gonna continue higher and expand higher, right? That you're gonna conclude that based on the lower time frame price action and lower time frame confirmation. Now, but as I said before in the beginning, retracement profile is what you will expect, right? Retracement profile is the one that you're going to expect once a drawn liquidity is reached or a significant range high or range low is reached, right? And then that retracement could either turn into a reversal or maybe an expansion profile, right? Now I'm going to go down to the daily time frame and we're going to see what we've got there. So right here you can see that this Friday's candle, right, closed just below this range high, and then this candle right here, it was purged on Monday, and also with that it also tested a key level in the form of taking out a weekly range high, right? So this candle right here will now become a CRT for us, right? And our objective once it's purged and our objective once it's purged will be to first of all target the 50% of the CRT and then eventually the opposing end. But the first target is always going to be the 50% of the CRT range, right? Now you can see that we've determined our drawn liquidity on the weekly and the daily time frame, right? On the weekly time frame, we expect a retracement profile, right, which gave us a bearish scenario, and on the daily time frame we've got this bearish CRT and we are targeting 50% of this CRT right here. So our drawn liquidity based on the higher time frame analysis is bearish, right? Our bias is bearish, and similarly we also build a narrative for our trade idea here on the higher time frame, right? Now I'm going to go down to the 4-hour time frame to find a CRT there and then position myself toward this higher time frame down liquidity and take a trade there. So right here, let me first put the weekly opening and closing times right here. Okay, So on the 4 hour right here, you can see that after this weekly open, we straight away went into this expansion profile, right? And with this expansion profile, we also tested a key level in the form of weekly range high and Monday CRT high, right? Now, based on market profiles, we know that when expansion profiles test a key level, the next likely market profile is going to be a reversal profile, right? Now, obviously, we can't just expect or anticipate a reversal profile right away. We first have to match it with the CRT and look for a lower time frame confirmation that now that the expansion profile has ended, and now we can start looking for a reversal profile. That's how we're going to do that, right? Now here you can see that this 1 a.m. big bulky candle right here, right, and price budget, and also with it it tested a key level, right. Now we can use this candle as a CRT and look for entries on the lower time frame. Now if we go to the 15-minute time frame, you would see that it actually offered a short trade, but then price went above and took out the stop loss, and this trade turned out to be a losing trade. But that's completely normal, and our narrative and our drawn liquidity and trade framework is still in place, right? Here on the 15-minute, you can see that it was purged right here, and then we had this CSD occur, which formed this model 1 entry, and then price eventually took out the stop loss, and this trade lost. But as I said before, the framework is still in place, and you could still look for a new trade and exploit the narrative that we had built on the higher time frame. Now I'm going to be completely honest with you, right, and keep it completely real with you right here. You need to remember that you're going to have losing trades and you're going to lose trades, right? Even with CRT, it's not like it's going to offer you 100% or a 90% win rate, right? It never works that way, and anyone who claims to have a win rate higher than 80% with any strategy or system is full of shit, right? Trading isn't about the wins and losses, but rather it's a game of probabilities and being content with what you get from the markets. Now, if a single loss or even multiple losses or even a losing streak messes up with your psychology and you started panicking out, then first of all, you got to work on your psychology, because without a proper mindset and without a proper way of thinking, you cannot succeed in the first place. The way you can actually do it and solve that problem is by gathering as much data as possible, right, regarding your model, and then live testing that model as much as you can and being confident in that strategy, and also being aware of the losses and treating them as part of the game and treating them as an inevitable part of the game, right? That's how you should think about losses. And moreover, you need to think in terms of probabilities and be aware of the relationship between win rate and risk to reward ratio. Now, when you are aware of the distribution of losses and wins, and you are aware of the relationship between win rate and RRH, risk to reward ratio, then you would never panic, right? And losses will never mess up with your head. For example, if you have a win rate of 50% with a risk to reward ratio of an average 3R, and you are fully aware of it and you are confident in your strategy, then you would know that even if you lose 10 out of 20 trades, you'd still be in profits, right? Because of the risk to reward ratio edge. And you will start treating these losses as a business cost or an opportunity cost rather than actually treating them like actual losses, right? For example, right here you can see that the first trade was a loss, but then it offered another one right here, which offered another 3R, which means not only it recovered the first loss, but also made us another 2R profits. That's the magic, and that's the magic of RR, right? Now let's say you weren't that confident in your system and you didn't had a proper mindset, right? Then in that case, when you had your first loss, you would have started panicking out, and maybe you could have missed the second trade and ended the day with losses instead of profits, only if you had just followed your plan and had been confident in it, right? And you need to be aware that you got to think in terms of probabilities and focus on the long-term horizon rather than the short-term profits. You're going to have times where you will have losing days or even losing weeks, but when you got the right mindset, right, they won't mess with you, right? Those losing days and losing weeks or even months won't mess up with your head, and you'll stay unfazed, still following your plan without a doubt, right? Okay, that was enough with the psychology shit. Let's get the breakdown again. Okay, so we can see that the first trade was a loss, right? But as I said before, the narrative in the trade framework is still in place, and we can start looking for another trade, right? You can start looking for another trade towards that drawn liquidity. Now, I did not took this first trade right here because I wasn't on the charts and somehow I missed it. But just know that if I was on the charts and if I had seen this opportunity, then I would have definitely taken it, right? I wouldn't have missed it, and it would have been a good loss for me. You know why? Because I would know that I had followed my plan, and that's all it matters to me. I don't care about the losses or the P&L. My objective is following my trading plan and not caring about the outcome and just following my plan, right? But today or yesterday I wasn't on the chart, so I missed this trade right here. But remember, if I was on the charts and I had seen this opportunity, then I would have taken it, right? You need to remember that. So right here you can see that with the next candle is open, it took out this candle's high. But one thing is that this particular candle right here never closed above this CRT, but rather it closed inside, which increases the odds even more, right? Because if this candle has closed above this CRT, then I wouldn't have had that much conviction in it, right? And I would have stayed away from taking another trade, right, after the loss. But right here it closed inside, which showed bearish signs. So even after first loss, I still looked out for another trade because of the bearish signs, right? So once this high was purged, I went to the 15-minute time frame, and right here on the 15-minute time frame we can see that this candle was purged during the London close scan zone, right? And we know that the London close scan zone is a really good time in macro for reversal. So with that in mind, I had more conviction in this trade idea. So once it offered a model one entry right here with this CSD, and with this candle closed below that candle, I took an entry here, right? And you can see we reached the drawn liquidity, and this trade turned out to be a winner, right? This was the trade breakdown on EU.